Hello everyone, my name is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis, market commentary, trade ideas, and mechanical systems since 2003. So we've been around quite a while. We do this for individual traders, investors, and professional institutions. Okay, so let's go ahead and get started. This is my weekend technical analysis review of the markets for November 7th, 2021. If you happen to be new to Breakpoint Trades, these weekend newsletters are very comprehensive. You can see via the table of contents. We cover what the market did last week. We look at the major indexes on a top-down fashion, anywhere from monthly, weekly charts, all the way down to 15-minute time frames. We look at major indicators and bonds. We examine most sectors charts. We do a deep dive on commodities, currencies, cryptocurrencies like Bitcoin and other ones. We look at precious metals and stocks. By the way, I think that area looks very interesting for a swing trade long position. We also review trade setups, recently triggered setups. We've had some awesome setups. Hope you guys are catching these. And I did add just a few setups, but only a few, guys, because the market is quite stretched. And if you're wondering, if you're new to Breakpoint Trades, if you're looking at this on YouTube, this is our back end where we record audio for each individual slide. And so I'm going to move this up out of the way. Okay. The weekend newsletters tend to be anywhere from 40 minutes to an hour length. If you are on YouTube, I do suggest, trying out our service. Either take our free newsletter or subscribe. Our best membership is our 6-month membership because of the time. You get a big discount, about a 40% discount by paying up front for that time. The one thing that's useful on our standard newsletters is that we provide the chart ULs for each individual chart. And I really don't know of any other service that does that. So we give you that. And so you could save the charts on your side, edit them yourself, and also see how they do. And you could also play individual charts, audio for each chart slide, something that's hard to do on YouTube. Again, YouTube has its benefits because I'm able to point out things. Now, as far as the market, guys, I just have a little written discussion here. I'm not going to spend too much time on that because I'm going to cover everything in depth. Obviously, the trend is strongly up on all time frames, short term, intermediate term, long term. That said, I do see a few warning signs. Okay, number one, market's very stretched, and a little table that I will discuss below from real investment advice. Or basically over the last 17 days, the market has only had 2 down days. And that's only happened, that's the last time that has happened is since 2000. So over 20 years. And you can see that on this table here. Again, I'll cover this more below. And the other thing is seasonality. We tend to, while November tends to be one of the strongest months of the year, you typically get some sideways or little consolidation starting around this time frame up until before Thanksgiving. Then you get your typical Thanksgiving rally. But this is the time when you get some typical weakness and seasonality. And so that is something that makes sense here, which I show on these seasonality charts. Again, we'll look at this more below, but that's something to know. Also, last week on our DVTs, that's the dynamic variable triggers. Those are basically higher low stop ideas for, say, 401k type plans where you're invested in the market like the S&P and you're trying to stay long most of the time with some sort of protection. We got a lot of new DVTs last week on the daily time frames, 2-day and the weekly. So nice movement up there. I'll show you those charts. And again, like I said, gold right now has my interest. I talked about it last week. It looked pretty decent. And still looks pretty good, so we'll talk about that. And let's go ahead and get started here with everything. So first thing we'd like to do is go over the index sector table, what transpired last week. So the major indexes are at the top here. You can see we had a rally on Friday where the Russell has led. And the Russell obviously led for the week, up 6%. Again, not surprising. It had lagged most of the indexes, and it's playing catch-up. Plus, it's broken out of a big 8-month pattern. So nice gains on the indexes here. The Dow lagged, right? The NASDAQ was the second best, the techs. As far as the major market sectors, we follow 21 of them here. You can see on the side here, transports, banks, whatever, all the way down to utilities. Most of the sectors were up. So out of the 21 sectors here, only 3 were slightly down: biotech, healthcare, and financials. But everything else up. Semiconductors, the strongest, up 8.85%. Stocks like NVIDIA and AMD, which has been on a watch list, have just killed it. Retail had a big week. Transports had a big week too. Okay. Currencies, US dollar up just a tad for the week, so not much movement there. Cryptos here. Actually, looks like this cryptos didn't update. Let me give another chart here. Sorry about that, guys. So here's cryptocurrencies. They're all up nicely. Remember, they trade 24 hours a day, so they're up nicely here on the weekend. You can see the weekly gains. Commodities. Go back to this. Commodities, they were basically mostly to the upside here. General DBC, that's the index, was up 1.4%, helped by crude oil. Again, that was on Friday. We should actually look at the weekly instead here. So the weekly, most of the commodities were actually down. Crude oil down about 2.75%. Natural gas was one of the exceptions here, and sugar, which we're not going to look at. Also some weakness in the ags there. Copper continues to be weak, but it is at a major support, so I am interested in it here for a long. I actually went long some of the ETF, CPER. Precious metals had a nice gain. You can see for the gold and silver, and the stocks led. GDX, the miners, that's the ETF, up 3.3%, and that's what you want to see. You want to see the stocks lead. I have some individual names in that area that we'll look at. Bonds, both high yield corporate and TLT, were up for the week. Next. Item number 3 shows the economic news calendar. We just had the jobs report, and as you know, that came in stronger than expected last Friday. And the market, again, is most centered around earnings, though we've worked through most of the big names, like the big FANG stocks. All right, so let's go ahead and move to the charts. So the first chart here is those stats seasonality that I talked about. This is from Real Investment Advice, so give them credit. So what they show is over the last 17 days since 2000, so over 21 years, this is the first time that we've had only two down days within 17 days of the market. It shows you how strong the market has been and how stretched. So clearly, we've thrown the penny and gotten heads too many times in a row. We're due for some tails. So this just tells me that the market's quite stretched. Probably needs a little consolidation to work that off. I'm not talking about a big sell-off or something like that, but just some consolidation. That should make sense for everyone. Next. Chart number 5, here's the seasonality charts. And I have 3 of them here. I've been using these for quite a while. Some of these, like this one here, for example, is 20 years. This one goes back 59 years. This one goes back all the way to 1928. So nice overview of market statistics. So first off, we had the typical weak seasonality there in September, which played out very well. And then we've had a strong market. Now, if you look, we're in the November time frame here within the first week or so. So the first week and a half, you usually get some weak seasonality here. So this is what I highlighted via the yellow area. Okay. You can see it on this chart going back 20 years. You get your weak seasonality. Then, of course, your typical strong rally late in the month of November, Thanksgiving time frame. Okay. Here's another one. You can see the same thing. You get some weakness here, mid-November, and then, of course, your typical strong into November. And finally, this one down here going back to 1928. You see the same thing, and then, of course, the strength in late November. So everything suggests with seasonality and the fact that over the last 17 days we've only had 2 down days, we're probably due for some consolidation. That should make sense to everyone. Again, I'm not talking about a big market correction, stuff like that, just some sort of consolidation. Here's your market statistics the last 20 years. Again, November is typically one of the stronger months. up 2.2% on average. Okay, looks like April was stronger seasonality-wise, about 2.5%. So it's one of the strongest months of the year, but we're right around the time where you typically experience some weakness. Next, let's go ahead and move to the charts here. First off, these are our weekly KISS charts. This is the S&P and this is the triple Qs. So the DVT, we got a new DVT last week on all the indexes. So for the S&P, moved up about 100 points from 4270 roughly to 4370. So nice bump up there. And on the triple Qs, moved up from say 350, 290, 353 to 363. So up over 10 points. Again, think of the DVTs if you're new here, like basically trailing stops. So as the market goes higher, you get a new DVT. You know, think of it like a protection. You know, the DVTs are generally give enough room, wiggle room, so that they don't stop out on a lot of noise and usually keep in the uptrend. You know, when the market has one of those big 30% corrections like it did in February, March of 2000, it'll keep you out of that. Okay, like you can see back here. But on the weekly time frames, they've been really good. They have not been hit. The last time they were hit was in February 2020. They kept you out of that big market crash, and then they've kept you in this whole rally. And there's on the S&P, there's been something like 24 consecutive DVTs, and similar for the triple Qs. So done a damn good job. The other thing that's useful on these KISS charts, very simple thing, is the moving average ribbons here. And I have a custom moving average here that turns color with slope, called the BPTMA Deluxe. So whenever it's red and pinches into the moving averages, those tend to be, and they're in a bullish configuration, they're buying opportunities. You can see the last correction in September, it pinched red for 4 bars. So it didn't change, it wasn't really out of norm. The S&P, you know, so it wasn't, you know, it was simply a correction in the overall market uptrend. Next. Here's the weekly charts, DVT to KISS charts for the IWM and Dow. They also add new DVTs. Okay. Again, where these could be used for, you know, you're an older individual, you have money tied up in S&P 500 index funds. You don't want to move it, you know, very often, but you want some sort of protection. That was the overall idea to this. You can choose to use it what fits your style, but that's originally why I made these. These are the weekly time frames, again, which have been pretty good about avoiding a lot of noise. Next, let's go and jump to the index charts. So here's the weekly view of the index charts. Again, another nice move. They rallied off the supports over a month ago. So now we're up about 4 weeks in a row here on the major indexes. New all-time highs on every single one of them. Even the IWM small caps, which were in this horizontal rectangle range for 8 months, have broken out of there. This is the index that could really play some catch-up, and I think this index has a long way to go still. So I think it'll still outperform these other indexes going forward. So I have a stronger weighting myself in the IWM than I do, say, in the S&P, etc. Next. Chart number 9, here's the daily view of the indexes. Again, we had that typical correction in the September timeframe, which played out for seasonality. And we took out that September highs recently on all the indexes. By the way, guys, the reason I'm showing you that is because that September highs on all these indexes is now major support. Okay, so if we do get let's say we get a nice little pullback here, it's deeper than what you think. These areas right here will be good supports. Okay. All right. Let's move on. Let's move on to the S&P 500 charts. Then we'll look at the other indexes. So we like to look at these individuals. Here's the weekly S&P. Again, this also have the moving average ribbon. Very good guide. You know, it's not going to get you into bottoms or tops, but it does a pretty good job about catching the trends. And whenever it pinches, those are buy opportunities. You see that? The correction into September. Now, one thing I am monitoring is this MACD on the weekly. We did have a MACD divergence here for the September, and that did play out for a little pullback. But technically, we still have a divergence. You can see the MACD is still overall lagging the highs back here. So it's still possible we form another divergence. Okay, so be aware of that. Oh, also, one thing I just noticed, the CCI indicator, it's above 200. That's pretty elevated. That indicator doesn't get above 200 or below negative 200 that often. So that is something that stands out to me. Next. Chart 11, here's the daily view of the S&P. So again, in September, we had the pullback in the uptrend. It was a typical ABC zigzag. Okay, in uptrends, ABCs are bullish patterns, zigzags. Clear that out. All right, so typically a lot of technicians are calling this a fourth wave, and we've had a nice rally. Again, out of the last 20 days here, guys, we've only had 2 down days, right here and here. So that is quite stretched. We're definitely due for some sort of consolidation. Maybe another ABC, I don't know, and another rally up. Also, guys, take a look at the shooting star doji candlestick, right? So along with, you know, quite overbought conditions statistics-wise, look at your RSI indicators, we're due for some sort of consolidation. And with this doji here, that sets up a potential marker for a pullback. If you get a nice down candle here, that could set up an evening star pattern. All right, so just short term, we're due for some sort of pullback at least to the 9 EMA. This area here is your longer term support now, of course. I don't know if we're quite going to work our way down to here, but for obviously the 9 EMA would be an easy target to the downside. Next. Chart number 12, here's a 2-hour time frame. It shows you the inverse head and shoulder pattern that I discussed back in early October, and look how well that has played out. Awesome. I talked about this as a very simple swing trade guide. You know, if you're trying to manage something from a swing trade perspective, and by the way, this is what the KISS systems do, set your swing stops at each new high or low. So going long back here, your initial stop would have been here, this high or low, and you can have moved it up to here, here, each new high or low. All right. Now, late in a trend, when you have a lot of these higher lows, you can elect to take something off early versus waiting for the higher low. But that's been a pretty good guide, as you can see. Next. Chart number 13, here's another 2-hour time frame, just zoomed out a bit. Again, obviously the inverse head and shoulder pattern coil played out beautifully. So these are your support areas. You got to support right here, of course, at those recent highs and down in here. Again, I doubt on a correction of this time that we're going to end up down in these areas, but you know, they are something to be aware of where major supports are. Next. Chart number 14, here's a 60-minute chart. We don't really have any MACD divergence here. So far, the uptrend is healthy here. Okay, just a little overbought. Next. Chart number 15, here's a 15-minute chart. So here's an uptrend line back to October 28th. So that could be a support target area. It's possible right now we have some sort of ABC here. And what I mean by that is have a little A down, B up. If we get a move down this week, maybe we get a C move lower. This could be a potential target area. The horizontal lines here, these are all support areas as well. So you got a support here, previous high, 46.83, that's support. This area, of course, your uptrend line, and all these, again, all these horizontal lines below are now your support areas. Next. Moving to the KISS charts on the daily. So here's the daily KISS time frame. So the weekly KISS charts never hit their DVTs, as you know. Now the dailies did hit their DVTs back in September, right? Price went a little bit, formed a lower high, went a little bit lower. But then the KISS systems actually got back in pretty good here. Just a couple days off the October lows there, right here at the vertical line. And they've now had 4 new DVTs, actually 5 new DVTs on the daily. So the current daily DVT is right around 445.60. Okay, but this is a good example of the daily getting out and then getting back in at similar prices to where it got out. All right, Again, some of you longer term guys may not like that. You may prefer the weekly, but otherwise this did a pretty good job of getting right back in. My general suggestion with these KISS systems is they're good to use as exits, but try to use something else to get back in earlier than maybe what the system would do. But this did a pretty good job. Again, it was only got back in about 1 day off the bounce low. Next. Chart 17, here's the various KISS time frames. So here's the daily up here. So shows you how extended the market is. We got a DeMark 13 early last week, and the market has continued higher. Normally, DeMark 13s mark some sort of high. So that's a pretty extended sequence. If you don't know what DeMark is, just Google it. Here's a DeMark 13 on the half day. So that's an area where we could pull back. Now notice the ATR indicator. That's the cyan color. That's nice support on all these time frames. That's something I'll be watching this week. And let's move on. Here's the Dow real quickly. We don't spend too much time on the Dow. It's only 30 stocks. So nice recovery here as well. Again, we do have some overall, that MACD divergence back here in September played out. But we do have an overall MACD divergence that is setting up again. Next. Chart 19, here's the daily view of the Dow. Not quite as an ugly candle as the S&P, but it is quite extended here. Next. Chart 20, here's the triple Qs weekly, up 3.25% for the week. Nice rally. Here's the MACD. Notice we're forming another divergence here. We had a divergence back here into the early September, which obviously played out. But the MACD is still overall lagging. Next. Chart 21, here's the daily chart. So again, quite a rally here, just like in the S&P. Notice the black candle here on Friday, so it is quite extended. Maybe we get some sort of little ABC zigzag here correction, just because it is quite extended now. This is your major support here, previous highs, and of course the 9 EMA. Next. Chart 22, here's the NASDAQ. We usually don't show the NASDAQ because you can't trade it, but it's just been an amazing guide for support and resistance. This was previous resistance, became support, resistance, and now, of course, this area is support. So if you get a pretty good pullback in the market, let's say it's a little more than most people think, this area here would be big support and would be an area to look to aggressively buy. And apologize, guys. Hold on just a second. Sorry about that, guys. My mouse battery went out, so I had to quickly look for a new mouse. So anyway, there's the NASDAQ. So let's move on. Here's a 60-minute view of the triple Qs. Again, really nice move here. The positive thing for the bulls, you don't have any negative divergence on the MACD, just got overbought. So what it tells me is we get a pullback, it'll still be a buying opportunity. Next. Chart 24, another 60-minute view of the NASDAQ. Finally, chart 15 or 25, here's a 15-minute view. Now, looks like I didn't update this chart. One thing I do notice here, you could draw a nice clean trend line here. You see that? Sort of has a little head and shoulder look. It's going to be interesting to see where futures open this evening and where we open on Monday. But if you break this, you have a little open gap right here that's a magnet. And of course, down here would be a potential target on a pullback. Okay? So that's what stands out to me on that time frame. Next. Moving to the KISS chart. So here's the daily KISS for the NASDAQ triple Qs. Again, very similar to the S&P. They got out back here in September when the DVTs were hit, and they got back in here just off the October bottom. It was a good entry, and we've had 5 new DVT higher lows since. So next. Chart 27, here's the various cycle time frames. Again, very similar to the triple Qs. Just been a hell of a rally from the October lows. Like I said, the market's very stretched with only 2 down days in the last 17. something that hasn't occurred in 20 years. The ATR indicator on these time frames are all support now. Again, you can see how stretched we got here on a 60-minute. Take a look at the moving average ribbon of the BPTMA. Notice on these, the dotted line, what I did is I added the Bollinger Bands to the ribbons as well. And when I find whenever the BPTMA gets out of the ribbons, you tend to be quite stretched. So we're seeing that here a bit. Again, short term, the ATRs are your support. By the way, the resistance indicators here, the fact that we blew through the resistance indicators back in early October, that was bullish, guys. Remember, these cycle indicators are useful for support and resistance. But when you blow through resistance cycle, it's bullish. Next. Chapter 28, here's the Russell 2000 weekly view, up 6%. So it led the major indexes. Again, it was in this horizontal range for over 8 months. You started getting a little indication that it was going to break out back here. And so far, the Russell is now outperforming the other indexes. This consolidation allowed the ribbons to pinch. Nice breakout, good volume. Also, take a look at the MACD here from an educational standpoint. It had simply recycled near back to zero and crossed up. That's bullish. I think the Russell will outperform the indexes the rest of the year. Next. Chapter 29, here's the daily. Again, broke out through this resistance. This is now support, guys. So if we get a consolidation, if we were to get down to this area, that's your major support. Not saying we get down to there, but if we do, that's your big area. Support, if you got some additional cash, that would be an area to maybe look to buy some. Look at the volume breakout there. Next. Chapter 30, here's the 2-hour time frame. Again, so far healthy, besides a little RSI divergence here. Ribbons were very wide, but MACD's healthy, no divergence. So that suggests a pullback will likely form some sort of flag. Finally, chapter 31, here's IWM small caps, or IWM on the 60-minute time frame. Same deal. Again, just quite stretched here. Now, we do have a little bit of MACD divergence here, but the MACD is really far away from zero. Usually I find when you get that it results in a pullback but nothing major. Where the MACD divergence typically produces your larger pullbacks is whenever it occurs when the MACD is closer to zero. And you just don't have that here. Next. Chapter 32, Facebook. Actually, I meant to have this down by the trade ideas, but we'll cover it now. Got out of order. So Facebook, it's been kind of an interesting trader here. As you know, they're also going to change their names to Metaverse, whatever the hell that means. I did a little research into it, but I don't know what the big deal is, but whatever. Anyway, Facebook formed a nice divergent low on the MACD. I talked about this over a week ago. I said, you could be long Facebook with a swing stop right here. That's your higher low. Now, you possibly could move it up to here. Got a little potential higher low right there just over the 200-day. Now, the positive thing here is, and I talked about it here in these comments from a week ago, that it needed to break symmetry. Nice rally from the divergent low. We have. So the rally off of this low is larger than this. Say about 39 points versus almost 27 points. That's a break in symmetry. Notice price stalled at the 50-day. So that suggests the next pullback will form a higher low and be another buying opportunity. So if you're not long Facebook, watch the pullback. You may get an opportunity to buy it. I'll do a separate video on symmetry one of these days. A very powerful tool. All right, let's go ahead and move on to market indicators. So that does it for the indexes, guys. Here's the VIX. So one thing I talked about late last week was this potential double bottom on the VIX. You can see it's bounced right here, rallied on Friday, despite the fact that the market S&P went up. Usually when the S&P and the VIX both go up on the same day, market usually has at least a short-term pullback. You could also see the divergence on the RSI. So take notice of that, the double bottom here bounce. Next. Chapter 34 is a 60-minute chart. You can see the double bottom bounce there. Next. Chart number 35, here's the VVIX. Been a very useful indicator for us. We started using this about a year ago. This also had a nice perfect double bottom bounce, big rally on Friday. However, the important chart is the next one, which is chart number 35, the VVIX with the VOMA line. VOMA line is this 110 area. I don't know why 110 is significant, but it is. So typically whenever the VVIX is below 110 and it crosses up above 110, that gives you a warning for the market. Okay. Notice I've marked it on all these examples. Sometimes you get pretty good corrections. Sometimes you just get a 1 or 2 day pullback, but it's usually pretty dang good. And, even right here, so you had at least a couple day pullback. So it did close slightly over 110 on Friday. Not much, 110.21, but still, that is a short-term warning on the market. And given the market statistics, with the 2 down days and only 17 days, or only 2 down days and 17 days, and the general weak consolidation during mid-November, kind of makes sense for a little market pullback in here. Next. Chart number 37, here's S&P versus high yield corporate. As you know, high yield corporate was lagging. Now it still hasn't erased this divergence. I talked about how it could erase the divergence, but we still technically have a divergence here, but it could easily, again, it's pretty dang close to making another high here. Next. Chart number 38, here's the NIMO McClellan oscillator. It's not selling us anything right now, guys, but I'm just using it as another educational tool. So here's the thing. Back in early October when the market made the low, and then whenever this quickly spiked outside the upper Bollinger Bands, that was very indicative of a market bottom. Whenever market forms a bottom, and if price gets outside the upper Bollinger Bands fairly quickly, that is usually a very good confirmation that the market put in a low. And you can see that, here. So that has worked out very well. Here's another example in the past. Early in the year when you had a little market pullback, and then very quickly the NIMO got outside the upper Bollinger Bands. Next. Chart number 39, there's another McClellan oscillator. Same deal. This is the S&P McClellan. And this one had spiked outside its upper Bollinger Bands just a couple days off the low. So that was, again, bullish. So that's just something to be aware of in the future, guys. When the market has a nice correction, watch these McClellan oscillators. If they get outside your upper Bollinger Bands quickly, very indicative that the bottom is in place. Next. Chart number 40, here's the breadth indicator, NYSE advanced decline, and it is healthy. Where we look for divergences is when the market's making new highs, but this is not, but you can see they're both moving together, so it's healthy. Next. Moving to bonds, here's high yield corporate. Again, they've rallied back strongly last week. They played a lot of catch up, basically almost back to these highs. Next. Chart number 42, TLT 20-year bonds. I thought they were forming a bull flag here, and no, they're not breaking out of this flag. Okay. As you know, the FOMC came out. They are going to eventually taper, but they're going to do it slower. Quite slow, and traders like that. Again, what I've talked about here, the bullish thing on bonds is that we've simply had a complex ABC type correction here, and this will eventually go to new highs. That would support much higher prices in the market. All right, let's go ahead and move to market sectors. We're going to cover these quickly. We like to do a broad overview. So here's transports. They had a big week. Nice rally off this big support. This is resistance here. So what's possible, unless we break through this resistance, could form a handle. This could be like a big cup, form a handle, and then eventually break out of that. You can see we do have some RSI divergence here, so pulling back here would make sense. But overall, it could be a cup and handle formation. Next. Chart number 44, banks. They've been consolidating. Now what it looks like is it's some sort of maybe ABC correction. We've had an A move, B sideways, and maybe we need another C move down. By the way, this is support now. Next. Chart number 45, financials. Forming a bull flag here, perhaps. something like that. Still, obviously looks good. Next. Chart 46, technology, just like the triple Qs, they've been leading, but short term a bit extended. Look at that black candle. Maybe a little consolidation is needed. Next. Chart 47, semiconductors, up, and away. This first off was a great buy opportunity. It's a 200-day moving average. You had a divergent low there. Take a look at the RSI divergence. Quite extended, but again, this now is major support if we were to have a nice correction. Next. Chart 48, energy. That topped out back here. It's been consolidating. The question is, can we get another rally here, or are we going to pull back? If we lose this area, I think they'll go into a little deeper pullback. Clearly, this inverse head and shoulder played out. Next. Chart 49, oil services. Similar chart, inverse head and shoulder pattern played out. This doesn't look as strong as XLE. Notice, though, the moving average ribbon is pinching. Next. Chart 50, the bullish percent energy index. Remember I talked a couple weeks ago about this being at 100%, which was signaling very overbought conditions. So clearly it's worked down a bit. Again, at the time, I didn't view that as a major sell opportunity. I just said it was probably going to signal some consolidation. That's what we've been getting. Next. Chart 51, Biotech. Big rally over the last week off this support. Logically stalling at the 200-day moving average. What I'm hoping here now is this can form a higher low and then rally up. This has been the weakest sector this year. You can see it topped out back in February. So it has a lot of catch up to do. But I took some profits up here. Still own some. I'm hoping we form a higher low on this pullback. That's my thoughts. Next. Chart 52, here's the weekly chart. Next. Chart 53, industrials broke out of this recent resistance here. This was your big support we rallied off of in October. Next. Chart 54, there's the weekly chart. Large ABC consolidation breaking out of the pattern. Overall, the MACD, though, is lagging, so it's likely to form some sort of bigger divergence. Next. Chart 55, consumer staples, also taking out some major resistance here. Next. Chart 56, utilities, they look pretty good here. Obviously, down here was a good low-risk buy opportunity. We pointed out the statistical oversold condition here where you had 14 consecutive down days. That was a good buy area to, give it some room and you're rewarded. Right now, it's got a flag look if it can bust out of here. Next. Chart 57, healthcare. It's an uptrend, obviously. Next. Chart 58, consumer discretionary, up, and away. Look at this move after breaking out of this channel. Quite extended. Look at the ribbon, how wide it is. Little RSI divergence. So it is due for some consolidation, obviously. Next. Chart 59, real estate. Potential double top back here, but it could be forming a handle here as well and try to bust out of it. So there you go on the sectors, guys. Let's move on. Here's emerging markets. I know one of my big clients follow this. This is the weekly chart. Overall, been consolidating the whole year. This was resistance back in 2018. It's obviously big support down here, which it held. The MACD is recycled, but I want to see the MACD break this. It hasn't been able to yet. Next. Chart 61, here's the daily chart. The hope here is it can form a higher low, but it needs to do that. Hasn't done so yet. All right, let's move on to commodities. Chart 62, DBC. Commodity week. This is the monthly view. It's down slightly for the month, but long term, it's in a good uptrend. This is your next major resistance. It could have used some consolidation at any time, but it's in an uptrend. Next. Chart 63, here's the weekly. It's obviously had a hell of a last year and a half. Look at this. Obvious 5-wave type uptrend, but maybe doing for some consolidation sometime soon. Next. Chart 64, here's the daily. So far, you got a channel flag type forming. If it can bust out of here, then it looks going to go to another high, but if not, 50-day moving average would be your next target. Maybe even down here, that was previous support. Next. Chart 65, crude oil. As you know, took out this major resistance area, which is now major support. Next, chart 66, here's the daily chart of crude. So again, this is your previous resistance. That is your support. We'll see if it can, so far we have a little zigzag pullback. We'll see if it can attempt another rally or not. Next, chart 67, here's the long-term monthly chart. Again, we broke this, 13-year downtrend line back here, early part of the year. And this is your major support here around 75. That's your next major resistance, 95. Next, chart 68, natural gas. Hell of a year. Busted through this resistance. Big move out of this coil. And, of course, that double bottom back here. Now, this is support around the 475 area. Ribbon here is quite wide, so this may need quite a bit of consolidation, but we'll see. It's obviously in an uptrend. Next, chart 69. Here's the daily chart. Right now, it's trying to form some sort of coil. Lately, it's been rallying off the 50-day. Okay, but if it breaks the coil to the downside, then that would start a bigger correction. Okay, but for now, it's still in a coil. It could go either way. Next, chart 70, copper. So copper's had a pretty good pullback after breaking out of this coil early October. Your moving average ribbon is pinching, but notice this broken downtrend line. It's trying to hold that. I said that would be potential support. So it's trying to bounce off of there. This is a low risk buy area right here, guys, with a tight stop. Next, chart 71, DBA. Slight down week. Obviously, it's in a long-term uptrend. Now, one thing that shows up here a little bit is a potential rising wedge. See that, guys? Take notice of that. All right. Next, chart 72, uranium up 8% for the week. Continues to be in this long uptrend. Remember, I became bullish on it late last year after breaking this multi-year weekly trend line. That was the start of the bull market. This was a major buying opportunity. Next, chart 73, there's the monthly view. Again, long-term uptrend. Look at this moving average ribbon. Long-term, decent pullbacks are long-term buying opportunities. Finally, chart 74, here's the daily chart. Again, made a brief new high last week. Like I said, it is getting quite extended. You had a great buying opportunity back here in August, which I talked about, and of course, late last year. Next, chart 75, cotton was up last week, but well off those highs. This is another commodity in a long-term bull market. Look at that move. I have no interest in buying it up here at this point, though. Next, chart 76, here's the monthly chart. Again, broke out of a multi-year base. I would be interested in buying a pullback, something like that. Finally, chart 77, here's the daily chart. Had a nice coil here that actually provided a short-term opportunity recently. And chart 78, here's the daily ETF, BAIL, that provided a trade. I'm hoping for a longer consolidation on this, then I'll be a buyer. All right, let's move to cryptocurrencies. Chart 79, Bitcoin. So far, after making that all new time high in early or mid-October there, it's been consolidating here. We've either put in an ABC low here, just like we did back here. By the way, that was an awesome buying opportunity, this ABC correction there in September. Or we're forming a coil here and, more of a complex pattern. Next. Chart 80, Bitcoin Cash. This has been laggard, but it's trying to form some sort of coil here. So this is one I am monitoring. If it can bust this coil to the upside, it may play some catch up. Next. Chart 81, Ethereum. Continues to move higher. Again, Ethereum is predicted to, be one of the long-term leaders because so many systems are built on it. So it continues to rally from this pattern. Congrats if you're on it. Next, chart 82, one of the uranium or Ethereum ETF stocks. It's done a nice job here. Next, looking at some other cryptos, guys. Here's one I'm kind of interested in a little bit. It's a low priced one, busted out of the coil here recently on big volume. I may look to buy this on maybe a little more consolidation here. Next, Trevor 84, Mana, Decentraland, another one I'm monitoring. Busted out of a heck of a nice base here. I was actually long some from a couple months ago. Sometimes what I do with these little cryptocurrencies, I'll take a shot on some of these with a small amount and just hold it, and you know they'll just bust out like this. So I do like this big move on big volume, but it may need some more consolidation here. All right, let's go ahead and move on. Trevor 85, here's one of the stocks that moves with Bitcoin. Obviously, it's had a nice move. You can see it's consolidating. Next, Trevor 86, Mara. This was a recent long idea of ours. Gave a great trade last week out of the coil. Now it's overbought. Next, Trevor 87, GXXM. Here's a real speculative one, guys. Came out of a base here around 1 cent. Big move up all the way to 17 cents. It's now at a big consolidation. So did a little research on this company. It has some potential, so I do own a little bit of it. Next, the reason I'm willing to give GXXM a little room is because, here's some other ones that are similar. DeFi, this thing a year ago was in the 4 to 5 cent range. It's now $3. So think of the percentage of move. Next, Trevor 89, Hive, another one of those. Sucker was trading around 50 cents back here, 2020. It's now $4.50. So, these crypto stocks, etc., these suckers can have potential crazy moves. That's why, I do show some of these speculative ones. All right, let's move on. Let's take a look at the dollar and then precious metals. So here's the US dollar. Stalled last week at resistance here. Overall, the chart still looks bullish. It held this uptrend line. This is your resistance. If it can take out that, that's your next resistance. All right. Little pullback on Friday. Next, Trevor 91. Here's the tradable ETF. UUP has the same exact chart, obviously. So if this were to break out, can gold rally? Maybe. Sometimes they don't move together. Or if this were to sell off and lose this uptrend line, that would not be positive. But we'll keep an eye on that. Let's go ahead and move to precious metals. Let's look at gold. Gold has my interest at the moment, despite the dollar still looking okay. So here's gold on the weekly. This is your weekly downtrend line. If it can break this, that would be extremely bullish. Now, it was in this base back here, 2017 to 19, busted out of that. Nice uptrend. This is your big support, which was held. This is your big resistance. Next, Trevor 93, another weekly chart. Basically shows you the same thing. Here you can also draw a downtrend line on the RSI to monitor. But again, for the bulls, we really need to see it get over this downtrend line. Next, Trevor 94, here's another weekly chart. Clean chart, shows you the, again, resistance trend line, support trend line. This also shows your GDX-GLD ratio, which is perked up. Next, Trevor 95, the monthly view. So nothing's obviously changed here. The bullish view is you're having an ABC correction and that gold will eventually have its day and have a big rally. Kind of like a big cup and handle. Again, every crypto is what's involved. Is gold dead, or will it have its day one day? I still think it'll have its day. If it does, 2022 could be a big year for gold if this pattern were to play out. Next, Trevor 96, gold on the daily. So started to break this coil on Friday. That's a positive. That's your next resistance. We need to clear that as well. Next, Trevor 97, GLD, the ETF. Again, has my interest because it kind of has this complex inverse head and shoulder type pattern, but we need to see follow through. Next, Trevor 98, silver. Nice move up, moving average ribbons pinching. The bullish view is here that we could have formed a right shoulder of an inverse head and shoulder pattern perhaps. Next, some ways to play this area. GDXJ. Potential inverse head and shoulder pattern forming. One of the ETFs. Next, chart 100 SILJ. Potential inverse head and shoulder. And GDX also has the same pattern, which for some reason I don't see in this chart. Let's take a look at some individual names. Chart 101, AXU, here's a low priced one. You can see this kind of rounded bottom, potential inverse head and shoulder. Swing stop could go right here. Next, chart 102, BTG. One of the ideas I gave back in September. It was an awesome trade out of here. So if you're still long some, this would be a swing stop. Overall, nice uptrend. Next, chart 103, EXK. This is a silver stock, potential inverse head and shoulder type pattern. Complex inverse head and shoulder pattern. If you want to go long, this could be a tight stop right here. This is your resistance it needs to clear. Next, chart 104, FNV, one of the larger ones. Also that particular similar type pattern. That's your main resistance otherwise. Next, chart 105, Goro. Here's a low price stock. Nice double bottom back here. I like, got a clean resistance right here at 194. Next, chart 106, HL, another silver stock, similar pattern. You can see, guys, a lot of these have the same type of potential inverse head and shoulder patterns. Next, chart 107, HMY, also not an inverse head and shoulder pattern, but we gave it as a long idea back here. Falling wedge obviously played out beautifully. I went long some last week. I got a stop right here at this higher low. Next, chart 108, SIL, silver stock ETF, similar pattern, inverse head and shoulder. Next, chart 109, SVM, swing stop here, trend line resistance here. So again, guys, these are all precious metal type stocks. Next, chart 110, USAS, low price stock. I like the look of it here as well, if it can clear this area. And there you go. All right, let's go ahead and move on. Chart 111, platinum. This is an area to monitor as well, should the precious metals have bottomed. Next, chart 112, GDX on the weekly, up again 3% for the week. It's obviously had a heck of a correction for the 2020 lows. Like I said, we'll see if we form a higher low here or not. Next, chart 113, GDX on the daily. You can see the potential inverse head and shoulder pattern here. And that would be an area for a swing stop. Again, guys, we gave this as a long idea back here. But we did break symmetry in this rally up, so there's high odds that we form a higher low here. But you can see we stalled at the 200-day there. So the precious metal stocks do have my attention here, guys. Now let's finally move up with trade ideas. Final part of the newsletter. So chart 114, AMD, played out awesomely. This is a long idea of mine back here. The falling wedge pattern. Had another bull flag here. It is now very extended. I took my final profits last week. Heck of a mover, though. Next, chart 115, lows. Also was a great move out of this resistance trend line. Quite extended here. Little RSI divergence in place. Next, chart 116, Airbnb was a recent long idea of ours. Coil pattern or ascending triangle pattern. Look at that move. Obviously earnings, but if you held it, awesome. This thing played out beautifully. Next, chart 117, Costco. Costco, another one of our ideas from early October out of a coil pattern. We like these because you can put a tight stop at that higher low in the coil. Very good move. Congrats if anyone held it that whole time. The 9 EMA is your current support. Next, chart 118, NVIDIA, another coil. Look at that monster move out of there. Again, quite extended now. Good time to take some profits if you haven't done so. Next, chart 119, MCHP. This is a new one from last Wednesday, so very recent, actually last Thursday. Resistance here. It's a semiconductor, broke out of here on Friday for a trade, so that was a recent one. Next, chart 120, Applied Materials, another recent idea from early last week on Tuesday. Broke out of here, this resistance on Thursday, big follow through on Friday. So great trade from last week. Next, chart 121, Lucid. Big, really good example. First off, guys, whenever a stock has a nice long base resistance like this, it often can provide you a good swing instead of just a trade. So initially busted out of here, pulled back, held that 9 EMA. If you gave it room, boom, nice move up on Friday. Next, chart 122, Boeing. I gave this as a double bottom long about a week ago. Nice rally. Look at Friday's move. Next, chart 123, Disney. This was on our watch list for quite a while. It was either a short or a long. Well, it held this area. I went short a couple times, stopped out. I went long on Thursday and then big rally on Friday. Good thing I've changed my position. Next, chart 124. Here's the 60-minute chart. He had a nice coil here in a 60 minutes. Started breaking on Thursday there. Then, of course, big gap on Friday. Next, chart 125, JEPI. Here's one of the dividend plays that I like. This is one of those covered call dividend plays. It's got a resistance up here. This pays monthly, so if you're into dividend plays, this is one of my favorite ones. Next, chart 126, NUSI, another one of my favorite dividend plays, pays monthly. This one had a recent nice move up. Next, chart 127, Main Street. This is another one of my favorite dividend plays. It's not a covered call one, but look how well it's done this year. Big move on Friday especially. They also increased their dividend recently on the monthly. Pays about 21 cents a month now. Next, moving to some new setups here. So here is CPE, potential cup and handle. I posted this on Friday. Nice long deep cup. Let's take a look at some potential long-term targets. Chart 129, there's the weekly chart. So if it can bust out of this area, your first target would be 70, and then this would be your next potential targets over time. Next, chart 123, gel. It's been on the list for a while. It's coiling. Another new idea. Next, chart 131, DRNA, basing pattern. You got a resistance right here coming out of a base. Next, chart 123, drip. So it's an inverse ETF for oil and gas. It's forming a potential divergent low. One I'm monitoring if we get a correction in that area. Next, chart 133, VSH. Here's a new one. Bull flag, resistance 2070. Next, chart 134, XP. Here's a new one as well, coming out of a divergent low. Nice breakout on Friday. Next, chart 135, Zebra. This was a recent long idea of ours back in October. Hell of a mover. If you bought this 200-day moving average. Here's the 2-hour time frame. I like to zoom down to smaller time frames when looking to buy a major position like that. I'll talk about that another time, guys. Newsletter's been long enough, about an hour here. Right now, futures are open. S&P futures are down about 3 points. So we'll see what happens on Monday. Enjoy the rest of your Sunday evening. Take care.